Hey everybody, Rob Maurer here, and today we're going to spend a little bit of time talking about the macro environment, specifically inflation and interest rates. We mentioned yesterday that the CPI report was this morning. We'll talk about the details there. We also have new information on the California Department of Fair Employment and Housing's lawsuit against Tesla that they mentioned in the 10K that we had talked about. And we've got another recall. I think this makes 4 in the last week or so. This again is over the air, but we'll share the details on that. And then we've got some news out of China and on Toyota as well. All right, looking at the markets today, obviously a really tough day. All of the major indices down significantly, more than 1.5%. The NASDAQ sort of leading that drop, down 2.1%. Tesla following, down 2.9% to $904.55. Really not all that bad of a performance in that type of a macro environment. Yes, still underperforming, but not as significantly as one might expect. So what's driving the markets today, of course, is the news on inflation, as well as expectations around interest rates and some comments on that. We'll talk about those. But first, looking at the inflation report from the Bureau of Labor Statistics. This was published about an hour before market open, and the inflation rates did come in higher than forecast. Economists that had been surveyed by Bloomberg expected increases of 0.4% in inflation month over month and 7.3% year over year. And the actuals here for January came in at 0.6% month over month and 7.5% year over year. So ahead of expectations, more inflation than expected. And the market not liking that because one tool that can be used to counteract that inflation is a raise of interest rates. So of course we've talked about that. The Fed has talked about that. This inflation report coming in higher than expected increases that probability as well as the possible timeline for those rate increases. So that's a big part of why the market is reacting the way that it is. We'll talk more about that in a second, but just wrapping up with inflation, I do want to look at the charts here. First, the year-over-year performance. We can see these year-over-year increases continue to trend up, but if we look at this period of time last year, so January, February, March, we can see that that's really when inflation started happening in a significant way. So like we talked about previously, I do expect that once we get into the report for March and especially into April, we'll start to see these year-over-year numbers look smaller as those bases become larger. Inflation last year in February was still pretty small, so when February inflation is reported on in March, we'll probably still see a really, really big year-over-year number. I'd be watching then for April and May for that number to start coming down. However, I think what's actually more important is the month-over-month changes because of that exact reason. Might give us a little bit better of a proxy of if this is really actually slowing down or continuing to grow at such an extreme rate. So if we look at that chart, we can see that for the last 4 months, this has been above 0.6% month over month. If that happens every single month, that rate of increase, that compounds to about 7.5% year over year. The targeted rate for inflation is 2% per year. So on a monthly basis, that ends up being about 15 basis points in between 0.15 and 0.2 on this chart versus the 0.6 that we're seeing. My aim here is just to help give context for these reports because we're going to have to keep talking about this. This is going to continue to be a huge influencer on the market overall, and therefore Tesla as well. So it is worth understanding. Now back to interest rates. With higher inflation comes the expectation that interest rates will be increased by the Federal Reserve more quickly than previously forecast. In general, higher interest rates increase the cost of doing business. It's more expensive to borrow money. That can reduce earnings power. That can in turn suppress the share prices because of that reduced earnings power. There are also impacts to liquidity, and particularly for high growth stocks, reduced liquidity and higher cost of debt can have an outsized impact. Now Tesla gets lumped in with those growth companies, but as we know, Tesla is not reliant on debt. They've got a great balance sheet with tons of cash. They don't really need liquidity from outside sources. So Tesla, I think, well positioned, but regardless, it's all about perception. Stocks trade in baskets, and Tesla is in a certain basket that's going to get more significantly impacted by these things. And that's true until it's not, right? Like the macro is going to have a certain pull on Tesla, but there are things that Tesla will do as its own individual company when it reports earnings, deliveries, things like that. And those things will change Tesla's trajectory, but we talk about those things every day, and we don't talk about the macro environment every day, and they both have significant influences. Anyway, back to interest rates. Obviously, the market being forward-looking, it's all about expectations here. And with the inflation report coming in higher, that increases the expectation of a rate increase for the March Federal Reserve meeting. That was pretty much a given, though. This has actually increased the expectation that there may be even a 50 basis point increase. Usually those are 25 basis points at a time. Further increasing those expectations and seeming to contribute significantly to a downturn that we saw throughout the day today were comments made by the president of the St. Louis Federal Reserve, James Bullard, who does sit on the Federal Open Market Committee this year. He said, quote, "I'd like to see 100 basis points in the bag by July 1st. I was already more hawkish, but I have pulled up dramatically what I think the committee should do, end quote. He then also added even more uncertainty by pointing out that, quote, there was a time when the committee would have reacted to something like this, to having a meeting right now and doing 25 basis points right now. I think we should be nimble and considering that kind of thing, end quote. So we've already got this uncertainty that seems to be building to an extent about what will be changed in March. The next meeting is on March 16th. Then in the midst of that uncertainty, you've got one of the committee members basically saying, hey, maybe we should have an emergency meeting and increase the rate right now. I think more than interest rate increases, this uncertainty is really what's causing a lot of the volatility in the market right now. As we had talked about before with that example of Amazon was a high price to earnings ratio stock, high growth stock, and even during a period of time of steady rate increases, it saw share price appreciation. That definitely can happen, but in the midst of all of this uncertainty, no one wants to be the bag holder on a growth stock until the sort of coast is clear, so to speak. And I shouldn't say no one. I'm more than happy to be a bag holder through that period of time. Like I'll sit through it, no problem for me. Because again, I think that Tesla is extremely well positioned to manage through a more difficult macro environment. I don't think higher interest rates or higher bond yields really have too much of an impact on where Tesla's heading long term. And I'm content to sit through it because I don't know and probably can't know when that sort of switch will flip and the market decides, hey, now we want to start recognizing where Tesla is heading. We've seen that happen many times in Tesla's history where there will be those very sharp periods of appreciation, and I'm not willing to take the risk on missing out on those periods, especially when I think Tesla is currently very underpriced. Missing out on that is a much bigger risk to me than Tesla dropping, another X%, because I have a lot of confidence in where Tesla's business is going, that would be a short-term thing, and eventually Tesla's earnings power will overwhelm anything that we've talked about so far in this episode. So that's my general philosophy as we go through this period of volatility. Sure, Tesla could fall further, but that's certainly not something I'm going to risk my entire portfolio on, because again, to me, the upside risk is way, way more significant than that. For me, if I'm trying to grow my share count, I think a much better way to do it, rather than trying to sell and then time the bottom, would be to look for opportunities where, it looks like Tesla is suppressed, use that opportunity to take leverage and grow share count through that, rather than selling and then trying to buy back in at a lower price and doing it that way. All right, let's move on then. I think I had more to say on that topic than I had thought. Anyway, we do have a little bit more information here on that lawsuit that Tesla disclosed may be coming in the 10K filing. Remember, this is from the California Department of Fair Employment and Housing, the DFEH, and the Washington Post reported yesterday that they have gone ahead and filed a complaint with the California State Court over alleged systematic racial discrimination and harassment. Apparently, the DFEH said that they had received hundreds of complaints from workers. This is one instance where Tesla has actually given a public response. So they had a blog post yesterday titled "The DFEH's Misguided Lawsuit." Tesla notes, quote, "This follows a 3-year investigation during which the DFEH, whose mission is supposedly to protect workers, has never once raised any concern about current workplace practices at Tesla. Rather, the lawsuit appears to be focused on alleged misconduct by production associates at the Fremont factory that took place between 2015 and 2019. End quote. Tesla also notes that over the past 5 years, the DFEH has been asked on almost 50 occasions by individuals who believe they were discriminated against or harassed to investigate Tesla, and on every single occasion, when the DFEH closed an investigation, it did not find misconduct against Tesla. Tesla says that it therefore strains credibility for the agency to now allege, after a 3-year investigation, that systematic racial discrimination and harassment somehow existed at Tesla. Tesla also adds that to date, despite repeated requests, the DFEH has declined to provide Tesla with the specific allegations or the factual basis for its lawsuit. I also tried to find out a little bit more information on this. The Washington Post did have a statement, but on the DFEH website, I don't see anything about it. Their last update was on February 2nd, and that would have preceded this. So just one of those situations we'll have to wait for more information on, but I do think that the questions that Tesla has raised there are good questions. All right, next up, another day, another over-the-air recall. This time it is in regards to the pedestrian warning system. So the headline number here is almost 600,000 vehicles, and the issue is with the boombox feature. So as we know, that external speaker on newer Tesla vehicles, or has been retrofitted to some older vehicles, that is there to facilitate the pedestrian warning system that is required for electric vehicles, but Tesla also uses it for the boombox feature. So this is now going to be disabled while the vehicle is in motion because NHTSA believes that, quote, "While boombox and the pedestrian alert sound are mutually exclusive sounds, sounds emitted using boombox could be construed to obscure or prevent the PWS from complying with FMVSS 141 when the vehicle is in motion," end quote. From the chronology, we can see that Tesla disagreed with this decision. They went back and forth, and Tesla eventually decided to issue the voluntary recall. Personally, I think it's quite silly. I mean, I get what they're saying, that music could obscure the sound of the pedestrian warning system, but then you would have music. There's going to be a Doppler effect on the source of that music if the vehicle is in motion. The combination of those things, plus the pedestrian warning system also still being active, sure seems like it would be fine. You'd get the same effect with the windows rolled down if you were playing music. So I guess the next over-there update that we can expect is to no longer be able to roll down the windows when music is playing, because that too could obscure the pedestrian warning system. Anyway, let's move on. Next, we've got a couple of quick design updates. First, on Tesla in China, the Wall Street Journal is reporting, according to a Chinese government document, that Tesla will be establishing its Chinese Design Center in Beijing. I don't really have anything to add to that, but definitely let me know in the comments if you do. And then the other design-related update that we have, Electrek is reporting that Alan Clark, formerly the Director of New Programs Engineering for Tesla, worked there for over 12 years, has left the company to join Ford under Doug Field, who previously also worked at Tesla. It happens. Tesla will keep rolling, and for Ford, it's probably good to bring in some of that Tesla influence, but at the same time, it's going to take more than just a few people to change the culture of Ford. All right, last couple of things here. First off, we haven't really talked too much about this, but I'm sure most people are aware that there are protests going on in Canada over vaccination mandates. NPR today reporting that those protests are actually blocking some bridges, and those blockages are causing automakers to not be able to staff their factories, further exacerbating just sort of this whole supply crunch that has been going on. So General Motors, Ford, Stellantis all have had to either cancel some shifts or operate at reduced capacity. Fortunately, not something here that would likely have much of an impact on Tesla. The last thing then is an update from Toyota. They did report their most recent quarter's earnings, and like we had previously heard them say in January that they were cutting their February production expectations by 150,000 units globally. They have now given a similar update for March, saying they expect to lose between 100,000 and 200,000 units in the month. They are again citing semiconductor bottlenecks, saying, quote, "We do not think this imbalance between microchip demand and supply will improve anytime soon, and coupled with coronavirus outbreaks, the outlook still remains unclear," end quote. So we started out with inflation, we're wrapping up here with supply chain. These things are related. Of course, every company has their own intricacies, but Toyota here saying that they expect this to continue. That would seem to suggest that prices within the supply chain would continue to stay high as well. All right, two quick final thoughts. First, Elon Musk is supposed to give a long-awaited Starship update tonight, so keep an eye out for information on that. And then second, I would strongly suggest tuning in to tomorrow's episode of Tesla Daily. I'll just leave it at that. But thank you all for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast. And we'll see you tomorrow for the Friday, February 11th episode of Tesla Daily. Thank you.